Hey traders, Raghee here, and today we're going to take a look at the dollar. One of the things we know about the dollar is in many ways the overall uptrend that we see, this trajectory, is very much a part of the ongoing narrative about the eventual end of taper, and then we go into rate hikes. Right now, the expectation for rate hikes sits in June, but with today's JOLTS number, which was a job openings number for those of you that are not familiar with that, May actually took a little bit of a move where we saw some volatility for a brief period of time where there was some minimal expectation for maybe even May to be in play. And as this day has continued on, it's leveled back out and we still sit pretty firmly in the month of June for the first rate hike. That all is bullish for the dollar. Taper, eventual rate hikes. We do have the CPI coming up, and that again will probably cause some volatility, but this is the volatility that we want to take advantage of. So let's talk about the dollar setup and also the euro setup and talk about the difference between the two so you have a better idea of why you would want one over the other. The idea of the dollar pulling back and being a buy the dip is really simple. It's rooted in the structure. It's confirmed by the green grab candles, and we have the zone in the wave. The closer we can get to the lines of the wave, the more we have our entry level, and we'll look for a continuation. Even if we end up moving sideways for a while, trusting the trend that was is still going to give us clarity in times of a little bit more neutral sideways pause. All right, so we're ready for maybe if we see something similar to what we saw at the end of October. So this is a buy the dip, right? Now on the flip side of this is to sell the rip. So if buy the dip is 1, find the uptrend, 2, wait for the pullback, sell the rip, short the rip is 1, find the downtrend, 2, wait for the rally. And we do have a rally taking us to the 21 propulsion, which is a really nice resistance level here with the 21 exponential moving average. Of course, I'd love to see the price action get into the wave. So this would be considered basically an aggressive level to start either looking to short the euro. Now remember, there are micros and there are also put options you can buy in the FXE. So we have micros, we have the 6E. There's a number of ways to, by way of controlling contract size, we can minimize initial margin requirements as well as risk. So this would be getting short or getting long puts, double red, and then this validates to short the rip. Now, what's the big difference between the two? And by the way, while I'm diving into that, I'll talk about the ETF alternative. The ETF alternative for the dollar is the UUP. The dollar is a basket. The US dollar index or the UUP ETF, it's the same conversation for both. It is a basket, and it's a basket of mostly euro. About 58% of the US dollar index is euro. Then that is followed up by the yen, Canadian dollar, British pound, Swedish krona, and Swiss franc, right? And I believe pretty much in that order. So the euro is about 58%, just to give you an idea of the fairy dusting of the remainder of the currencies. The yen comes in second place at about 13%. So this is a euro conversation, but it's diluted by those other currencies. If you want a more straight up dollar versus euro relationship, if you want to make that the focal point of the trade the 6E futures short or buy puts in the FXE. This is the short side. This is where we are shorting euro and getting long dollar. That's really the mechanics of this position. And you can see here, this is the FXE. So keep this dollar trade in mind. And I'll tell you what, UUP is a very inexpensive option. You can really scale into these and control risk. So I'm looking at really two zones for this. One would be the 21 propulsion, which is sitting right there. So what I like to do is I like to use the alerts on TradingView or even TradeStation or Thinkorswim. And I would say I probably use Thinkorswim and TradingView the most. So I'll place an alert there, and I'll probably place in another one here at the Darvis level. So once we get down there, I'll get an alert. My futures traders, and really everybody, keep an eye on the DX. The reason it's a little difficult to keep an eye on the DX, and you might want to keep an eye on the 6E instead, is the DX trades on the ICE exchange, which is a separate exchange from the CME, where the 6E trades and the S&P and the NASDAQ. This one is a much pricier exchange to have data to. So I don't advocate it a lot unless you happen to have it. If not, keep an eye on the 6E. It's going to set up the dollar for you. It's going to set up the UUP and FXE for you as well. So what you can do is place those alerts on the 6E futures. All right. So pretty excited about this opportunity to once again short euro, get long dollar. It makes sense from a macroeconomic standpoint. It makes sense from a technical standpoint. And that's the kind of dovetailing we love to see in our trades. If you have any questions about the trades we discuss in these free videos, or any of the other topics we discuss, feel free to join me at the Charts and Coffee daily morning show at 9 a.m. at the Simpler Trading YouTube channel. And you'll notice right in here, every single day, we have our 20-minute show, Charts and Coffee. This is the one from today. And it's really a Q&A type live show. You can see all the questions here on the wow, a lot of questions today. All the questions here on the right. So we just take live Q&A and we break down charts together, preparing for the open. All right, so looking forward to seeing you there, 9 a.m. Monday through Friday at the Simpler Trading YouTube channel. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.